Welcome back, everyone. It is a Friday, and it is a feel-good financial Friday on this third day of June 2022. Hope everyone had a wonderful holiday-shortened week after the Memorial Day holiday. I don't know about you guys, but the holiday-shortened week always seems like a longer week. Is it because the Tuesday feels like a double bad Monday? Anyways, with me today, as always, financial extraordinaire themselves, Samuel Castellan, Kim Lanciel. Kim joining us from the streets of New York, Sam joining us from Miami. We've got the entire East Coast covered today. So, markets this week, sort of blah. Currently, we stand, S&P's up, an entire 5 points for the week as of now. It's been a volatile week. You see the up 400 or 500 points yesterday on the Dow, and NASDAQ's up 2.5%, 3%. And you think, wow, this must be another good week following last week's, record week that we haven't seen in years. But it's been sort of a blah week for markets. Rates moved up, so we're getting closer to 3% on the 10-year. That is not good for 30-year fixed mortgages, but they have not moved up so much. So what do we want to talk about today? One thing that caught my mind, guys, and you tell me, earlier this week, consumer sentiment came out, was released for the month of May, and it fell to its lowest level since August 2011. Found that almost hard to believe, but then again, you look around, and we talked about it extensively last week, the inflation, the gas prices, the food prices, and how that's just putting a dent into everyone's spending. Kim, I think you've got some thoughts on this.
Yeah, I do. So I can guarantee you what is happening for myself, for people around me, and all Americans is that we're racking up credit card debt again. So, and because of the consumer, ideas and thoughts is because they're going into credit card debt. And that's why people aren't confident in what's going on. They are paying for gas. Higher percentages of their credit card debt is going to gases. They are not going on vacation, so they're stressed out because they don't need, because they're racking up credit card debt for groceries. You go to the grocery store, you see what's happening with these prices. So that is really what's happening to Americans, and it's not good. It's not good at all. It all has to do with the inflation. So it's really hitting low income people the most. It's, we have the hottest inflation in 40 years. We all know that. And again, going into credit card debt, not a good thing, but people can't help it. They have to pay for things, especially here in New York City. Gasoline. My son paid $6.10 a gallon because he was inconvenienced. He was in the city, and that's what he ended up doing. So gas prices, it's affecting everyone. Guess what happens? The truckers, they're paying $200-300 to fill up their tanks, even more. I've seen $500 to fill up the tanks. That goes back to us. We end up paying more for going out. Guess what? People aren't going out. I just had a friend, she canceled dinner plans with me tonight. There's a group of us going out. It's whittled down to 3 people. She can't afford the $70. And $70 is really not that big of a chunk of money in New York City to go out for an individual. But she wants to do other things this summer, i.e., have an extended vacation on the beach. She needs it. We all need it and stuff like that. So going back to who it's affecting the most, people that make $50,000 and less. So they are spending upwards of 9, almost 10% of their credit card debt on gasoline because of those prices that I just mentioned before. $40, $35 to fill up a tank of our card. Now it's $50. How did that happen in just a matter of days? I don't understand it, right. But that's what's really, really happening. It's really risky what people are doing, but again, we don't have a chance. So, what do? You roll back, i.e. my friend who canceled on me. Cheaper vacations.
You roll back, exactly right. And here's the double whammy of that. Not only are people putting more on their credit cards because they do have to have gasoline to travel, or they do want to go to that dinner, or they do want to take that vacation, the cost of the credit card, the cost of the debt is going up. So there's a double whammy that happens when rates rise and everything rises. Now wages are rising, but everything else is rising. And that is the double whammy this week. Just on the oil itself, President Biden made a speech about, energy, et cetera. I know OPEC boosted production. It did almost nothing to drop the price of oil, whereas years ago, this would have been a shock to the oil markets. You would have seen, some pullback at least. We saw nothing. And the price of gasoline, it surpassed last week, this week, hitting the highest as measured by that RBOB gasoline price.
Doesn't surprise me at all. Doesn't surprise me at all. So back to, hey, jobs are out there. I'm trying to hire right now. I can't find candidates that are willing to. We keep raising the salary on the positions, and it's tough. It's really, really tough.
Wow.
So what are people doing? They're taking part-time jobs. And these are people that are making relatively decent money. So they have their regular 8 to 4, 9 to 5 job. Teachers that are making $50,000 a year. You know what? They got their summer jobs, but they're also tending bar because people are still going out. So they're making a decent amount of money, but that's stressful. And this is, not good on people's mentality. So what are people doing? They're going to services, government services, things like, Medicare. There is actually an extended program right now for Medicare. So we're talking seniors. Seniors can't live the life that they intended and they worked really, really hard for.
Who would have imagined, right?
Never. A year ago, the way the markets were doing and how happy they were, and their little nest egg was just 3 times the amount that they ever expected it to be.
Sure.
And bam, they can't even go out and have a beer.
And now they've dug in it. I just saw the symmetry. You just mentioned last year, Kim. Last year at this week, S&P was up 12.2%, was up 12.5% year to date. And this year, ironically, we're down about 12.5% year to date. It just shows you the symmetry. But again, that's just one measure of public equity markets. But again, it's more the inflation, the cost of things, the stresses. Listen, there's just more stuff out there that everybody's got to worry about, not the least of which is, things that are just happening all around us every day.
When are we going to get a break?
Well, we're getting a break soon. It is a Friday, and this is Feel Good Financial Friday. Sam, will you want to give us an update on the crypto markets? Anything happened this week of consequence?
There's some good, some interesting news on crypto, but I'm afraid they're not necessarily good. I mean, the crypto market is on a crash right now. And, that's, as like one of the theories, right, it says that crypto enthusiasts were hoping that since the beginning, right, that crypto would be, the opposite of the markets, where they would act ideally as gold, right? Like when markets
non-correlated asset.
And so that was the hope, right? The big hope that when markets would crash, cryptos would go up, and essentially we haven't seen that, and it has been proven over and over that when markets go down, people also get scared and they go out from cryptos, and that's exactly what we're seeing, George. And there were some interesting news this week, like even Christine Lagarde, the president, as you know, from the European bank, saying cryptos has no value. And that, I guess that's the trend right now. We're seeing like a bear market with all the experts saying I didn't actually know this fact, but there are like 19,000 cryptocurrencies right now. And that's
more than there's more cryptocurrencies than there are stocks.
Yeah.
In every market, NASDAQ, NYSE. Wow, that is just
19,000. That's a fact that I got this week. So it's so interesting because now what every expert is saying is look, there's so many that the market of cryptocurrencies is so vast right now that we can foresee a bubble as it was in the .com, when there are many things that didn't have an actual value. And we're seeing the same trend right now where people are just, putting the money out there, investing in companies or in cryptos that they don't even understand. And so we are seeing that dangerous trend right there, George. So, however, there's the positive there is even those same experts are saying look, whenever that bubble burst, we're gonna see a lot of things cleaning up so that only the real good solid cryptos remain.
Sure. Always healthy for the market. And not only going back to crypto, not only has it been non-correlated to the market, it has been highly correlated with tech stocks, and the NASDAQ in itself is in a bear market. So with that, let's end on a positive note. Anybody watching anything great this weekend? By the way, last weekend, we were all very impressed. I know we talked about it a bit. Top Gun Maverick, highest grossing movie over a Memorial Day weekend, over $150 million, which is amazing.
Yep.
So anyways,
On my list to see this weekend.
on my list to see, I think
I'm going to spend the money to do it.
I'm going to spend the money to do it in IMAX as well. I hear it's well worth it. So what are we watching this weekend? Well, we got French Open final. And I know currently we were checking out the leaderboard here. They are in the first set tiebreak. That is Rafael Nadal, multiple 14-time winner at Roland Garros. With that, we say adios to this Friday, June 3rd.
We'll get some better news for next week, for sure.
For sure. Hope everyone has a great first weekend in June. Take care, everyone.
Thank you.